Is Credit Suisse taking down the other big banks? Tell me more.
We'll tell you why. Because Credit Suisse has a 150-year history. It's one of the largest investment banks in the world. Bought up first Boston back in the 1980s, so it has an expansive footprint. And I think we're coming off Silicon Valley Bank, so there's maybe some fragility in sentiment, and that's why we're seeing this big move right now in Credit Suisse. I was just listening to the Credit Suisse chairman, who just said that government assistance isn't a topic for the bank, at least not right now. In fact, he said that the liquidity base is strong for the bank, and that's despite the fact that the stock hit a record low. We are sub $2 here across the Atlantic. Meantime, in Switzerland, you're sub 2 Swiss francs, record lows, and credit default swaps, something that we haven't talked about for a long time, since 2008. Credit swaps are insurance against bankruptcy, and that has spiked to almost 1,000 basis points for the 1 year. That's something I haven't seen since maybe 2010 during that European sovereign debt crisis, maybe 2008 when there were concerns. Now, this also means that people are scrambling right now to buy insurance just in case Credit Suisse goes under in a year's time. Now, Credit Suisse, serious trouble here. This morning, the Saudi National Bank said that they will not provide any more financial assistance for the bank they own under 10%. Also remember that Credit Suisse's largest investor, Harris Associates, which also owned 10%, sold off all of their Credit Suisse holdings over the past few months. And Credit Suisse, some would say, look at the withdrawals. This could be the next bank run that we're seeing. $100 billion in withdrawals the last 3 months to end 2022. They lost over $8 billion last year, and that, by the way, has wiped out a decade's worth of profits, and they're guiding for another loss in the first 3 months of this year. And I've interviewed numerous Credit Suisse CEOs over the years, whether it's Brady Dougan to John, and that's the problem, is that they've always had this rotating run of CEOs and leadership, which means that there isn't a consistent strategy at the bank, and which is why we've seen some bad investments in Archegos and Greensill.
Okay, that's Europe, that's Credit Suisse.
Yeah.
Bring me up to speed on what's going on here in America with a Larry Fink letter.
Yeah, so
that's really upsetting American banks.
Well, I would say also it's that fear of contagion from the
exactly.
European side. Because if we can bring up the other European banks, I mean, we're looking at some double-digit sell-offs. That also has an impact here, by the way, because money goes across borders. Larry Fink, as you just mentioned in his annual letter, said that there could yet be a third domino to fall. Cracks in the financial system that he's seeing. He says inflation will likely be sticky, stay close to 3.5% to 4% for years to come, by the way. Now, if you look at what's happening with the market reaction, the euro is trading at its lowest in 2 years. We're just barely above 1-to-1 with the U.S. dollar. 50% chance now that the ECB might not go 50 basis points tomorrow. What do you think in terms of how the central bank should react? Because some people say here on this side of the Atlantic and also in Europe, I think the central banks have broken something in terms of the banking system, and maybe it's time to pause.
I don't know. I don't really care about the European Central Bank. I'm more interested in America and American banks, and if this contagion comes over here. That's what I'm worried about.
Yeah.
The regional banks, I think they're down again this morning.
Yeah, they are down slightly, I would say. From what I saw, it was 19% there for First Republic. But also remember that they came back about 50-60% yesterday. You also had, ironically, Credit Suisse upgraded Charles Schwab, which was interesting, a brokerage that was caught up in all of this. Also, I want to note that you had this headline come out with Goldman Sachs. Did you see that Goldman Sachs was actually the buyer of that $21 billion bond portfolio from Silicon Valley Bank? Okay. They actually made $100 million, by the way, in fees in handling that $21 billion portfolio from SVB. And there are questions about who's going to step in to buy the remnants of Silicon Valley Bank. Is it Apollo? Is it Blackstone? KKR?
Okay, we've got a European banking crisis spilling over here.
Yeah.
Got a letter from Larry Fink, which is really hurting America's banks. And now we've got something on Apple. Yeah,
so Apple actually has an indirect exposure to Silicon Valley Bank, which I found surprising. So $100 million indirect exposure to SVB. And this is through their biggest compiler, Foxconn, which we know is owned by Taiwan's Hon Hai. They had their earnings last night, which also indicates where Apple's earnings might be going. And they said they had $100 million worth caught up in Silicon Valley Bank. So you see this global contagion where the banking crisis, if you want to call it that, on this side of the Atlantic or across the Atlantic, impacts a lot of deep-pocketed, rich individuals and companies.